I am joined by Jim Lockhart. He's now vice chair of W.L. Ross & Company, but for a long time here in Washington, it was your job to regulate Fannie Mae and Freddie Mac. You offered your thoughts to the Financial Crisis Inquiry Commission today. I want to get your sense. Fannie Mae and Freddie Mac, to what extent are they responsible for the financial crisis that took place?
I don't think you can blame them and say that they're responsible, but they were one of the many players that share responsibility. Certainly Wall Street does, the rating agencies, investors, people that got some of these mortgages, and yes, the regulators as well. I mean, it's a real shared blame, but they certainly had a part.
What was it about Fannie and Freddie's business? Because Dan Mudd was in here facing questions about that business. What was it about their business that you think that was ultimately contributed to the financial crisis the most? Was it the fact that they jumped into Alt-A and subprime mortgages? Was it simply how their balance sheet expanded, how they bought so many MBS out there?
Well, the major flaw was we had a flawed model with GSEs, and legislation was needed and it didn't get passed. But from Fannie and Freddie's, they did lower their standards, nowhere near as much as the market did. They did buy more of those Alt-A mortgages. Actually, their subprime mortgage buying throughout the decade was about equal, but they did lower their standards. They went into Alt-A, and they took more exotic mortgages than they should.
The argument from Dan Mudd was, listen, the government was telling us we had to serve lower-income Americans, underserved communities. That's part of why we had to get into these products. It wasn't a question simply of trying to drive profits. Is he wrong?
No, he's not wrong. We had HUD put some mission goals there for affordable housing that were probably, in retrospect, too high. And they had to expand their credit box to make those mortgages. As I said, it's a shared blame. There was a bubble in the housing market, and everybody participated in it. Fannie and Freddie, because they were almost half the mortgage market, were obviously a big player and helped that bubble continue to grow.
You had to make the decision ultimately, along with the Secretary Paulson and other government officials, to put them into conservatorship. Taxpayers so far, $126 billion, and you told this panel today that number is going to go higher?
Certainly the number will go higher. How much higher is hard to predict. If we can stabilize the mortgage market, if these modification programs start to really kick in, the number will not be astronomical.
Give us some perspective, if you can.
Well, certainly Keith Hennessy mentioned that OMB was, or I guess the CBO mentioned a number over 300 million. That's a possibility. I hope it doesn't get there, but certainly it could be over 200.
Billion with a B.
Billion, sorry.
Okay, yes. I want to make sure that we're still talking real money here in Washington. Yeah. What about the future for Fannie Mae and Freddie Mac? There's a debate going on. It hasn't actually really begun yet in Congress as to what form they take going forward. You offered some ideas today. Share them with our viewers. What should we do next?
Well, where we need to start is what we want the mortgage market to look like in the U.S. Do we want to keep the 30-year mortgage? Do we want a mortgage-backed security that's very liquid, the way Fannie and Freddie? Once you make those decisions, you make the decision on Fannie and Freddie. And there's really three alternatives. One, nationalization, which I think
Treasury Secretary Geithner says that's out.
Yeah, and I agree with the Treasury Secretary, and I agree with everybody that says it's out. It will just cause more problems. The second alternative is an improved government-sponsored enterprise structure. Some people talked about public utility, Secretary Paulson did. Some talk about cooperative ownership. It's still a very tough model to work. To divide between the private sector and the public sector, that line is very, very difficult. We may end up there. I would hope that we can move more and more towards a private sector solution, that we can really get the private sector back in, but we get the private sector in with much better underwriting standards.
All right, let me just ask you finally, you're not in the trenches anymore, particularly on the housing side of things, but from your perspective in the private sector now, you look at what's going on in housing right now, is there a risk of a double dip in housing?
Well, we're actually somewhat in the trenches. We own the second largest mortgage servicer, so we're seeing a lot of activity, the second largest subprime mortgage servicer. So we're seeing a lot of activity in housing. There is some fear that if we cannot prevent foreclosures, especially for those underwater borrowers, that we could have another dip down. We're starting to see FHFA house prices be down for the last two months, and that's worrisome. And certainly there is a potential for more foreclosures.
All right. Jim Lockhart, as always, appreciate you joining us here on Bloomberg.